Good evening. Welcome to Stock Watch this week. I'm your host, Zinati Kuma, and joining me for some stock-related analysis is Rowan Williams from Nitrogen Fund Managers. Thank you so much for your time, Rowan. Let's get straight into it.
Pleasure.
Actually, quite interesting questions that we have here today. So this is basically, the first question is on a strategy and really just the composition of it. Firstly, it's great because the first comment is that thanks for an addictive show. I'm glad. And the viewer goes on to say, I am slowly rotating into an ETF-based strategy, long-term and relatively high risk. So the viewer says, I'm doing around 50% S&P 500, 30% emerging markets, 10% world mix, 10% high risk AI mix. What is your view on this ratio and strategy?
Yeah, I think it's correct if the viewer says that's a high risk strategy. I think obviously it's all equities for one thing, and appropriately that there is a high exposure to the US market, so that has become the biggest markets, equity markets in the sort of worldwide composition. Maybe one comment is that it's maybe a little bit concentrated just with the US, so that you've got the emerging markets, which is a good diversifier. But the world market and that AI index, obviously the S&P index would also cover some of those stocks, so you're sort of getting a double exposure there. So maybe wanting to look at maybe an Asia index, if you've got sort of idea about, the prospects, relative prospects of growth and sort of exposure. You will get some exposure to India through the EM market, but I would probably diversify a little bit more than it is. It's probably just a little bit too concentrated in the sort of, it'll end up with quite a lot of global tech, which is at a very high point in the valuation cycle.
Well, actually just talking about Asia, Rowan, because we did get the Chinese data out today where everything surprised to the upside. GDP for the third quarter, retail sales, industrial production. Would you say that this would support appetite for exposure to China stocks?
Yeah, so China's been pretty volatile of late. It has recovered significantly off the back of, a number of announcements, stimulus announcements, both monetary and fiscal. So prospects are looking better. Even as early as this morning, the Chinese GDP growth numbers, surprised slightly to the upside. I think what is compelling is a valuation disparity. A lot of those big Chinese companies are trading at very low multiples, particularly relative to developed market stocks, particularly in the US. So just in terms of rotation or the prospects for return, I think are fairly good for sort of a broad base of, say, Asian stocks. So that would be an interesting portfolio diversifier and maybe a good point in the cycle to be adding it to a portfolio.
All right. Another interesting question for you there, Rowan. I've held a number of FNB's compo ETNs for US stocks for a while, some with better returns than others. I opened a US portfolio for the first time a couple of months ago as the rand improved. Should I only invest in those same stocks directly now that I can do that, i.e. sell the ETNs and reinvest either in SA equities or take some offshore?
So it's good to have the flexibility of investing in individual stocks through just a normal stockbroking account. It's very easy to access global stock market accounts. But I think you need to consider, if you're going to trigger capital gains tax, I mean, you're in the product already with the ETNs, you've got exposure to the underlying counters. If you're going to just rotate for the sake of it and it triggers some sort of capital gain and then go back into the stock, I don't think that's worthwhile. So adding new counters to the portfolio, do it through the stockbroking account, and possibly if some of those ETNs he alluded to, or he or she said that they may not have done so well, maybe the ones that are underwater where you're not going to trigger a gain, you can swap into the individual stocks. So I think it's just, you'd have to look at it on a case-by-case basis.
All right. Well, let's get into specific stocks on the JSE. And two questions on Sasol. Is Sasol a buy right now? But also, just with that, do you foresee any good news from the imminent production update that will be published for the 3 months ending September 2020? 2024. Do you expect any good news? And is it a screaming buy, or are you just running in the opposite direction?
Yeah, Sasol certainly has been somewhat of a vexing investment case. I mean, it sort of looks good on paper from a PE perspective, but cash flows haven't been great. They still have a number of challenges in their business model, just because the Synfuels business is sort of getting to the end of its life cycle. It's a heavy polluter. They're running out of coal and gas feedstock. They've had some production challenges. Oil has been volatile, but I think overall quite soft. And saw analyst comments more saying concerned about $50 a barrel oil than $100 a barrel oil. I think notwithstanding these sort of issues we've had in the Middle East, oil does remain soft, and I think it can go further lower from here. So coupled with the outlook for the commodity and some of the underlying business challenges, we still are avoiding Sasol.
Well, another stock that some investors are avoiding is a Pick n Pay. But actually, it doesn't seem that the stock actually went down too much today. Of course, they did release that trading update last night after 6 o'clock. It's okay. Earlier it was down about, just over 1%, now 3%, but it's not a heavy plummeting. Rowan, would you say that maybe all the bad news is in the stock, and that really the only thing that could actually move the share price significantly is potential upside?
Yes, I think the investors have sort of accepted the situation that the Pick n Pay core brand is in, and are looking forward in terms of the imminent unlocking of value through the listing of Boxer. So Boxer inside Pick n Pay has been a phenomenal performer. Their numbers are as good as Shoprite from a growth perspective, and very solid margins. So that is generating quite a lot of excitement. Obviously, if you want to get access to the Boxer IPO before it actually lists, you have to buy the Pick n Pay shares now. And I think that's what people have been focusing on. They're also, I think, accepting management's view on the turnaround. It's going to take some time, and sort of stemming the losses. They have already started to close stores, quite a few corporate-owned stores, and some franchises. So it's a work in progress from an unlocked value perspective. But really, the underlying investment case is largely Boxer and the Boxer value unlock.
Well, talking about value unlock, let's talk about Anglo American. Of course, we know that they are embarking on a value unlock strategy where they are letting go of some assets there to concentrate on kind of a streamlined group of assets. It's continued its upward trend today, and of course we heard that BHP might be in talks again as it looks to get in on Anglo American. Just talk to me about your feelings towards that deal, and if maybe BHP now has a better chance.
Yeah, so I think anecdotal evidence is that BHP is having a look again, and reports that the CEO was in South Africa to interact with the South African government officials, which I think is the right approach, just to get their buy-in before making potentially another formal offer. Remember, they had a 6-month period where they, after the initial talks failed, that they couldn't make any other offers to them. That ends at the end of November, so they may be preparing for that, and the market seems to think there is a potential for a bid there. And I guess BHP were keen. It was Anglo and the Anglo board that turned down the proposal. So, and they've announced their restructuring initiatives, which they're carrying on with. They've already started with that process. So it does remain quite an interesting space. I think some of the Anglo strength recently has been because of the Chinese stimulus measures as well. But there certainly is a little bit of a bid premium. So it is one to watch quite carefully. Anglo is going to continue with those restructuring efforts, so it will be a streamlined business regardless. So that is quite attractive. and I think does make it a more interesting investment proposition, takes away some of the conglomerate sort of holding company discount, and I guess after the restructuring also makes it a bit more of a viable acquisition proposition. So there are sort of underpins to value around these levels, and if you sort of positive on China, that's sort of also in terms of the underlying demand for the commodities that is firming up or looking less uncertain. So not a bad point to add some Anglo to the portfolio.
All right. Well, let's get to more questions. What is your view on Reunert at current levels?
Yeah, Reunert has been a strong performer. It's an old industrial business, but they've sort of reinvented it somewhat to have good exposure to renewables. Also, the exposure they have to the defense industry has been underpinning demand, particularly export demand. It's a quality business, quality management in good sectors. So we still like it, notwithstanding the strong share price performance. I think renewables is here to stay, even though load shedding has abated. Corporates, which is where they're more focused, are continuing to add it to their energy mix, more from a reliance and resilience, and from a sort of cost perspective, it makes economic sense. So I think demand is good there. Defense spending remains firm in this sort of bipolar world that we're in, so underlying demand is good. They also have exposure to sort of the more generic IT services sector in South Africa, and I think with improving growth prospects for the South African economy, the outlook for that division also looks promising. So overall, we still think it offers reasonable value with reasonable growth prospects here.
All right. What about investor Sabvest there?
Yeah, so Sabvest is an interesting case. It's investment holding company. It's had quite a sort of mix of assets. I saw an analyst note out actually yesterday. The share has done reasonably well. It still trades at quite a large discount to NAV. It's transformed more into unlisted assets. So it's always sort of questionable what the sort of underlying value is. They have had an investment in an AIM-based company that has recently done very well. So that's up, 40% in the near term. So that's bolstered the NAV. So it still trades, I think, at a significant over 30% discount to NAV. I think so that means it's interesting. I think you have to look at those underlying private businesses and be happy with the prospects and valuation of them. But I certainly think, it is an interesting investment opportunity.
Well, all three of these questions coming from the same viewer, so I'd say pretty strong holdings there, because the next one is AVI.
Yeah, so AVI has been a phenomenal performer. I think there was a period where we saw it had previously been a strong earnings growth compounder, a period, so the last 3 years where the South African consumer has been under a lot of pressure. Their earnings largely went sideways, but they've continued to sort of eke out margins out of their portfolio. So still a very strong market positions for all their key products and biscuits, creamers, and the various groceries in their basket, beverages. So it's a very well-run business, very high return on capital. It does look rather full, though. They also just announced a special dividend. So I would say, it's a great business, but it's fully valued or fully priced here. So in the fast-moving consumer goods space, maybe there's better value elsewhere. Nothing about the quality of the business.
Rowan, I quickly just want to pick your brain on the U.S. earnings, because, of course, lots of people trying to find opportunity there. The latest one being Netflix. What stood out for you there in terms of what you've seen so far in the U.S. earnings?
Yeah, so what we are seeing is quite a lot of solid earnings announcements where they actually meeting or slightly beating expectation. In the case of Netflix, post the market close, the numbers were very good, very strong subscriber growth, continued business momentum. And what was interesting to see there in particular, a lot of subscriber growth came out of EMEA, which has sort of a potential, competitive impact on multi-choice. So the big businesses look like the juggernauts. They really have strong market positions and continue to cement those market positions, and a very strong platform, and they're converting that into margin and earning. So I think Netflix is a type of in the streaming space is sort of where there are network effects. So the bigger gets stronger, and the smaller sort of followers are starting to fall away, where subscribers, they've got the money to invest in content. So it's a bit of a winner takes all. So it probably makes sense in the streaming space to back the big gorilla, which is clearly Netflix.
That is very, very interesting. Well, let's get to your stock picker for today. Rowan, what are you hanging your hat on?
Yeah, so we're actually going with Mondi. It had a quite disappointing third quarter update and has sold off quite heavily off the back of that. So it's also a question of a good entry point. Has strong positions in sustainable packaging, which I think has good medium-term demand prospects. It was sort of a low quarter. Their third quarter tends to be a bit lower than the others. I think what sort of is interesting, they've made a number of investments in the business, a small acquisition, and also efficiency projects which are going to play through in the next financial year, and they could add up to 100 million of euros in EBITDA, and that's a strong underpin, I think, to earnings growth here. So again, quite a nice entry point. It's below 300 Rand a share, and does look reasonable for the medium term. I think a lot of shares have run hard, so you're looking for value, so this one ticks that box.
All right. Well, thank you so much for your time and for your analysis today, Rowan. Much appreciated. That was Rowan Williams from Nitrogen Fund Managers. And that's all we have time for this evening. We'll be back next week at 6:30. So be sure to send it through your stock-related questions on email at stockwatch@bdtv.co.za or via SMS on 41392. Back to tonight, we bring you more business analysis right after the break, so stay watching.